CFA Society Sri Lanka, I would like to welcome you all for our webinar on FinTech in Sri Lanka, opportunities and challenges, organized in collaboration with EY. Today, the conversation will center around global and regional market trends within the financial ecosystem, the local market maturity, and the rising opportunities and challenges, together with the regulatory reforms within the FinTech landscape in Sri Lanka. We are very pleased that we have an eminent panel of speakers who will shed the light on the subject matter. Ladies and gentlemen, with that note, it is my pleasure to invite Mr. Deshan Pushparaj, Chairman, Continuing Education Committee of CFA Society Sri Lanka and Managing Director, Global Markets and Investment Banking of Capital Alliance Limited, to formally welcome you. Deshan, over to you.
Thanks, Aruna. I start by echoing Aruna's sentiments. We thank you, each and every one of you who are participants who are joining in today, and we welcome you all to this very important discussion on FinTech in Sri Lanka. And we thank also the panelists who have, eminent panelists who have agreed to share their thoughts at this event. To give you a very quick introduction to CFA Society Sri Lanka. CFA Society Sri Lanka is the Sri Lankan arm of CFA Institute and is comprised of 250 investment professionals currently, and there are another 500 odd candidates as well. And it's a growing profession in terms of investments here in Sri Lanka, and we are happy to share our thoughts on such important matters as FinTech. If you take a look at FinTech itself, I'm sure the panelists themselves will share more of their ideas. It's well and truly being revolutionized. It's one of the financial services was one of the last frontiers of disruption, but especially with COVID, I think FinTech and investment in FinTech has really precipitated, and I'm sure that's something that we'd love to hear from the panelists on. At this moment, I'd also like to thank our knowledge partners, Ernst & Young, who have partnered with us in this event to share their thoughts and lead the thinking around FinTech. I also want to thank our sponsors, Platinum sponsor Colombo Stock Exchange, and Silver sponsors Equity and CAL for their support as well. And we welcome all of you again. And I hope this is a very productive event, and I hope that we would continue this discussion and take this industry forward as well. Thank you, Aruna. Back to you.
Ishan, and so with that note, I would like to introduce our moderator for the day. It's none other than Shanaka De Silva, Senior Director, Technology Consulting at EY. So with that, ladies and gentlemen, please welcome Shanaka De Silva, who will moderate and manage the proceedings of the rest of the day. Shanaka, over to you.
Thank you, Aruna. Yeah, thank you, Aruna, for that introduction. A very good evening and a warm welcome to all of you. Thank you for joining this webinar on FinTech in Sri Lanka, opportunities and challenges, hosted by CFA Society Sri Lanka in collaboration with Ernst & Young. Well, no doubt that this topic is timely and relevant in today's context, as we had over 500 participants registered for this event today, which is exciting and which indicates that it's quite timely. Well, if you look at FinTech, and if you have ever paid for something with your phone, transferred money using an app, or checked your bank statement online, then you're already part of a multi-billion-dollar industry called FinTech. Stands for financial technology. This strange industry is changing everything from how we make purchases and how we get loans. Ironically, the first fintech that went global is PayPal, a name that we already know, but they went global in 1998 at a time when we had not even heard the word fintech. So fintech originally, if you look at, well, started as the backbone of a financial institution. That's the back end technology that used by a finance company, financial institutions, and today, of course, in a way, it competes with a finance or bank or a finance institution. Well, we thought it's important to have this session today to share experience from a global, regional, and a local perspective. That's how the panelists are set up. And also, we also wanted to look at the regulatory perspective. What's the plan? What's the vision of a regulator to support this industry? That's the reason why we have Mr. Kumar Tunga from Central Bank. We have a very eminent panel lineup today, each one of whom I will introduce when I prompted them to speak. And agenda today is very simple. We will have about 1.5 hours discussion with the panel members, which also includes a Q&A session. And we are planning to end the session around 5 p.m. today. So as participants, please use the Q&A window. You will see an option for the Q&A window to submit all your questions to the speakers. Well, in the interest of time and the number of votes for each question, I will pick those questions and then link it to the relevant panel member. All speakers, kindly keep your camera and the mic switch off while you're not presenting. And when you're presenting, of course, you can switch on the board. So, ladies and gentlemen, we could not have had a better set of speakers with us to talk on this subject. Our first speaker for today is Mr. Victor Anthony Pillay. Victor is the country officer, IFC, World Bank Group in Sri Lanka and Maldives. Victor, thank you for joining today. My first question to you, Victor, while we know fintechs are evolving, we want to know the global context in how do you see the development and evolvement of fintech in financial services space in a global context, and what kind of opportunities that you have seen in this global perspective, as well as what kind of challenges that you have seen. Over to you, Victor.
Thank you, Shanaka, and good afternoon, ladies and gentlemen. The importance of technology cannot be felt better today than ever before. Who thought a tiny virus will confine us to our homes, but technology liberated us, including financial technology, which has come a long way from the first mainframes that were built in the Bank of America to the ATMs and now to our fingertips. I would like to begin answering Shanaka's question by first addressing the demand for fintech and move on to cover the challenges a little later on. So we all know access to finance is foundational to achieving inclusive growth. Responsible deployment of financial resources contributes to financial inclusion, which enables investments that enhance livelihood, build resilience against shocks, and provide all important capital for MSMEs. So what is the global demand for fintech? A few mind-boggling numbers should settle the score, I thought. A third of adults still lack access to a basic transaction account. This number is 1.7 billion adults. Millions of SMEs and adults lack sufficient access to credit. The estimated finance gap is around $5.3 trillion. A very few people in emerging markets are able to save at formal financial institutions. South Asia stands at 17%. Low access to insurance leaves people more vulnerable to shocks. In emerging markets, the insurance penetration stands at 2%. This is the opportunity. FinTech is the story of how back-end technologies in established FIs evolved and migrated to the forefront and transformed and transforming today the way to meet the demand for financial services globally. So what are these underlying trends that make the promise of fintech possible? First, I should say the increased connectivity. which enables financial services providers to deliver services directly and instantaneously, removing a key physical access barrier. We all know in 2016, the mobile cellular subscription surpassed world population, and smartphones today are ever prevalent. The second is the improved network effects. This helped the financial services provider make services more operationally viable and more valuable to the individual. When network effects are strong, the value extracted from the network by individual increases by a big margin. The third, I should say, is the increased availability and also the ability to process alternate data, which helps financial services provider better target and service the market. Data analytics allow financial services providers to reach individuals who were previously excluded due to lack of traditional data. The fourth, I think, is the consumer preference for convenience and tailored digital solutions. This has motivated financial services providers to develop their own digital solutions. Technology, data, and analytics are making services better, faster, and more intuitive. So with FinTech, there are new improved business models that have emerged to deliver financial services. There are many of these, and I probably would take 6 of these as an example, which are actually in the forefront. When you talk about FinTechs, you talk about the startups, which are challenging the traditional providers by being very nimble. And they're serving an underserved segment, or they also provide faster and better services. Then what are the incumbents that the traditional financial institutions doing? They are also stepping up their technology, and they are more partnering with the FinTechs to deliver the services online through mobile phones. And then the banking as a service. Banking as a service, which provides companies access to banking toolkits so they can integrate the regulated banking products into the custom apps. These are the APIs that we see. The digital-only banks, these create a retail banking experience that is digital-only and mobile-first, rebuilding services in new scalable ways to enhance the customer experience. Then the telco-led model of FinTech. These use their wide range of phones and agent networks to deliver financial services, often partnering with banks to expand their reach and broaden their offering. Platforms go into financial services to complement or expand their core business by leveraging the huge amounts of data available to them. So what are the trends that we need to watch in FinTech, especially in technology, in regulation, and otherwise the ownership? So I think the adoption of application programming interface, the APIs, will be a key to watch in the future. These are about 2 systems communicating with each other with a defined set of rules that enable in a secured way to access real-time sharing of financial data, real-time initiation of payments, and also information on products and services are provided. So there is comparison that's possible. You can make very much an informed choice. Then artificial intelligence, machine learning, and robotics, needless to say, that has infiltrated every single sector in the world, and that is taking over the financial sector as well. The ability to crunch large amount of data, the way that behavioral analysis are done, making the algorithms built on AI very much an efficient, accurate, and predictive model. These are used for credit decisions, trading decisions, to improve personalized customer experience through things like chatbots, and also to prevent fraud, and also a cost-efficient model to improve the automation process. And the next one I should say is blockchain. Financial institutions are already using it for international money transfers, security clearing and settlement, and KYCs as well. So there is a lot that's being kind of used for. So I think these 3 technologies will be the key to watch. And then looking at the innovation in regulation, With all these innovations taking place, it is important for the regulator to keep check on what's going on, but not make sure that you kill it, but also enhance the experience and the security of these innovations. So I think PDS 2 type of regulations that you see in the European market and UK are things to watch for, and there'll be many more to come to enable the digitization efforts. I also feel one more thing that we need to watch for is the mergers and acquisition between the traditional FIs and the fintechs, which is going to rule the world in the future. And I think we need to keep an eye on that. Needless to say, with all these innovations, you also face challenges for financial institutions, regulators, and the users in the end. I will classify these challenges into 5 different elements. First, I should say the exclusion. The unequal access to technology limits fintech's potential and increases the digital divide as scale-based business models favor large and connected markets. And discrimination. While the promise of analytical decision-making tools is to remove bias, experiences suggest otherwise. Then consumer protection risks. Digital finance attributes instant, automated, and remote. These may create consumer protection risks that are distinct from traditional models. Lack of transparency and misinformation in product may put customers at risk for over-indebtedness and also even to loss of funds. Then data protection and privacy. The potential for risks such as the compromise of privacy, identity theft, and fraud to cause harm is greater where the consumers have low levels of financial and digital capabilities. Fraud itself, if you look at some users of basic models, may even be unaware of the potential for fraud in mobile and online interactions. Users may not be aware that sharing their PIN or account information may put them at risk for fraud by agents or other bad actors. All of these can be attributed to weak financial and digital literacy. This makes the potential harm from these risks greater, especially in emerging markets. So while we look at the financial technology improvements, we also need to look at how to build awareness and how to make people use their devices more smartly and securely as well. With these initial thoughts, I will pass on to Shanaka, and maybe at a later time, we could take up some questions as well. Thank you, and over to you, Shanaka.
Well, thank you, Victor. Thank you. Great insights that creates a foundation for other speakers as well. I'm sure the audience will have many questions that we will take it up later. Well, our next panel member is Mr. Channa De Silva, General Manager, Chief Executive Officer of Lanka Clear. Thank you, Channa, for joining today. Well, Channa, you are trailblazing the technology and the infrastructure as the central point and the transaction facilitator between financial institutions in Sri Lanka. And you have already initiated many things like SEF to just pay, to slips, and local debit credit card. My question to you is, how is this embraced by the banking community? Well, are they supportive, or do you see any challenges in our old-fashioned banking models? Over to you, Channa.
Thank you, Shanaka. Thanks for the question and thanks for the opportunity. Yes, the question is interesting, but I think the question is whether the financial institutions and banking sector is receptive. But I think before getting into that, first we really need to understand the landscape of the country, because even for financial institutions to push this through, you need to understand the landscape. So in my opinion, the landscape is actually ready. I mean, if you really look at, these are statistics from January 2021 through ITU and other statistics, we have a population of about 21.5 million population. But the interesting fact of that is only 19% or 19.5% of that is urban. which means 82, almost 81 to 82% of the population live in what we call rural areas, right? So in terms of providing solutions, unless we are, we are aware of this situation, we only cater to, 20% or slightly above that as our base, which is fairly low. And however, in terms of our digital penetration, right, mobile phones, actually, these are not mobile phones, probably the number of SIMs issued. We have issued almost 30.4 million SIMs to a population of 21.5 people, right? Which is almost 142%. So we have issued SIMs. So maybe the active mobiles may be slightly lower, but pretty much we have one phone per individual at least. And these are not 100% smartphones. So the next number is the number of users who access internet, which is roughly about 11 million, 10.9 million, which is about almost 50% or slightly above 50% of the population. And the interesting fact is the active social media users is almost 7.9 million, which is almost 8 million, which is about 37% of the population. So this is actually the landscape for digital to play right now. And see, that is where the issue is, right? Just because we have digital landscape, the banks and others, if they think that any solution that works outside the country will just plug in here, that doesn't really work. Because if you just simply compare Thailand versus Sri Lanka, Thailand has a 70 million population and a mobile penetration of 129%, which is close to us, slightly lower. But their population is 50% urban. And in Sri Lanka, it's only 20%. So the solutions that they provide and how they reach a larger segment of the population is different, because in our case, we have to look at rural base. If not, we are not going to get anywhere. So in that sense, another aspect that we have gathered through statistics is actually the accesses to ATMs, ATM screens. Almost 65% of our people access ATMs using Sinhala and Tamil menus, which means they're comfortable with the language of their native language, because obviously we are talking about financial technology, and if you press the wrong button, they're scared. They're scared to use the technology, and they are more prone to use the technology in a language that they prefer. So in terms of how has the bank response, actually it's plus and minus in some areas. Now, if you really look at the payments landscape, which has been implemented by the banks, right? So we have issued almost 1.98 million credit cards. This is as per the payments bulletin Q4, which is put out by Central Bank. And debit cards, actually 2019 had 23 million, actually more than the population, which is bank accounts, which is down to about 18 million in Q4 2020. Obviously, due to COVID, probably banks couldn't deliver the cards. So what it really means is, even though 23 million debit cards, we estimate there are more than 30 million bank accounts, in the country. So definitely more than the population. So it's a heavily banked country. I mean, comparative to some of the other countries, right? However, even though this is the case, where we should be, the FinTech numbers, the payment numbers must be going through the roof, we find that the point of sale terminals, if you are to use a card, you need to have a point of sale terminal at the merchant. We have only issued 87,000 terminals over almost now 30 years of card use. So obviously the spread is not there, and out of these 87%, a larger segment is in Western province. And compare that with the latest thing, we'll talk about it later, but the QR codes, the Lanka QR code that we have initiated with Central Bank. As of Q4 2020, we had almost 170,000 QR codes issued to merchants. And I'm sure Gomaratunga will have the numbers. It's definitely somewhere around 240,000 merchants as of now. So it's actually propelled people to join, obviously because of investments and other things that are less. So in terms of adoption of banks, right, we have seen a lukewarm. I think traditionally they have been thinking that customers will think that this is my bank, this is my customer, my bank, right? And I think we saw this even in the case of like ATMs, jealously guarded their own network, having 500 ATMs or 1,000 ATMs. They thought that's a number that they can be proud of. But now, since we have come in and connected all the almost 5,000 plus ATMs, the smallest bank can say, I have 5,000 ATMs. So that advantage of having your larger network has simply gone away when you connect all of them together, because customers can be customers of any of these ATMs put out by any bank. Similarly, we have introduced some of the things like mobile payments. We will cover some of those later. And what we have done is a customer of any bank can use any of these apps to make a financial transaction. So, so previously, what the banks thought was my internet banking, my mobile banking, my app, all those things are slowly but surely going away, especially actually thanks to sort of COVID, helped tremendously in this process. But in terms of banking, we see things are changing. We see that they are seeing the threat that is coming to them. And we see that they feel that it's not just your technology anymore. It's collaborative, right? You have to collaborate with the industry. You have to collaborate with because the smaller players are actually doing that. Smaller players are more aggressive, and smaller players actually partner quite easily and quite well. So because of that, we see the larger players now have to respond, especially the last 15 months or so during this pandemic. I think when people put into a situation where they have no choice, they had to embrace technology, which didn't happen for maybe last 2 decades. I mean, internet banking has been there for, I would say, more than a decade, but utilization of that by the consumers or the customers of banks has been fairly poor, right? But still, it's a cash-rich country. We can actually see that when we look at the payments bulletin. The currency in circulation in Q4 2010-20 was 834 billion. So, which means still we are a cash-rich country. And even though we have almost 20 plus mobile payment apps in the market, including a fair bit of FinTech apps, the progress towards adoption has been fairly slow. So I think banks have invested in, especially in the back-end technology, automating, making things efficient. But in terms of reaching that consumer, especially when you are looking at the millennium and obviously the Gen Z, the reach is not just a browser-based internet banking. I mean, people use that, but I don't think that is the preference anymore. It's actually through a FinTech app. What can you do? What are the possibilities that are available to you? So I think that is what even the banks are realizing. So I think our role also has been to create this marriage between the banks and FinTechs, because also I think the more than even the banks, actually banks are now more receptive. I think even the FinTechs have sort of so-called technology sector also, I think, have misunderstood the opportunity space, right? Because I see 20 plus payment apps in the market, right? And I always go and ask them, what is the difference between payment app A, B, and C? I mean, why should I use A versus B versus C? I mean, there's very little differentiation in this. Right? So what they don't really realize is that consumers are looking for convenience, not just making a payment. Actually, payment is a byproduct of a service that they consume, right? For example, I mean, I'll take a simple example of Pick Me or even Uber for that matter, right? I mean, we are using technology to go from A to B. We are not using technology to make a payment to the three-wheeler guy. Right? So the service that is consumed is moving from A to B, whether it's a person or a good or whatever, right? And for that service, we would have to make a payment. That is where the payment comes in. It comes as a byproduct of the whole service. So unless the FinTechs realize that the service component is not payment, because most of these guys say, how do I make payment to the petrol shed or a three-wheeler or something, which is actually, I mean, people have been paying with cash anyway, right? So it's not really been, we can say it's, lack of change and so many other things, but it's the convenience of consuming a life, requirement of need of a person, travel, goods delivery, so many other things. I mean, peer-to-peer lending, that is also possible, which is also part of FinTech, ecosystem. And there are so many other things. So I think we really need to understand that the backend systems, the banking, the apps are ready to facilitate the payments. But I think what we really need is actual innovation in the market to address real consumer needs. So once we have that, then the role is to marry these two, right? And actually to marry the backend side is ready. And banks are now more receptive than ever, again, thanks to COVID to a great extent, but they are receptive to partner. I mean, we have seen that over the last, first, few years we struggled, seriously, we struggled. But then once they start seeing the small players coming and eating their lunch, right, or taking customers away from them, then they realize that this is something that they need to get into. And also something that they realize is they don't have to do it all alone. And there's enough people to provide technology, because I wouldn't say the banks are the most technology innovative, sector, right? It's the fintechs, it's the technology industry who will bring in cutting-edge technology, whether it's a mobile payment app or IoT or whatever that the technology will bring in the future as well. So the technology industry will bring that, and creating that marriage and making it work. I think that is where the success of the fintechs is going to be. So if you really look at the fintech sector, I think there is a low-hanging fruit, because obviously for fintech sector there has to be a payment, involved in providing when you are providing a service. So I think some of the areas that they need to concentrate is the urban-rural divide. So unless they want to drive numbers, if they don't want to drive numbers, they can concentrate in Western province. But if they have to go outside, so in that sense, trilingual requirement will come in. And in terms of, they have a base of level almost 50% population accessing internet, and almost 8 million customers who have access to smartphones. And also, as soon as they realize that payment app is not the way forward, which is providing services through digital, whatever that digital service may be, whatever the requirement of the consumers, day-to-day requirement, lifestyle requirements of the consumers, as long as they address them, I think we can create this marriage. And we are in a very good footing to create this marriage, because we have all the instruments in terms of linking different payments together. And I think it's that innovation piece that needs to come in. People can look at, we are a small country, we have only 20 million, whereas other countries have that. But I mean, see what actually happened between Uber and PickMe when Uber came and then PickMe followed, right? I mean, we would not have thought that we would use an app to get a three-wheeler. I don't think that even would have crossed our mind, because when we walk to the road, there is a three-wheeler. But what this provided was additional features, additional value. Now it comes to the home, you can track it, you can even send your children. So those added features that the fintechs provided, right, that actually attracted people to consume the service, which we didn't even anticipate that we need. Right? So that is the fintech. That is the landscape for fintechs. That is the greenfield available. Think out of the box, come up with a solution that addresses a human problem, consumer problem, you will win. So I will cover the rest of the segments later. Chanak, over to you.
Thank you, Channa. Thank you. That was very insightful. One interesting thing, Channa, you highlighted particularly, we have more than 20 payment apps, and I'm sure I was just counting. We have about, I think, close to 10, ride-share applications. And very correctly said, most of them lack innovativeness, but they are mostly only concentrating about UI UX side, but has not really penetrated the market. And I'm sure some of them are suffering a lot. Some of them are not making enough money to sustain the operations. So I agree with you. And also some of the insights that you gave during our discussion will basically trigger my next question to the next panel member as well. So I'll come back to you with the rest of the questions, Channa. So our next panel member is Mr. Shanta Bekon, Chief Executive Officer, Digital Financial Services, Axiata Digital in Malaysia. Thank you, Shanta, joining us today. So, Shanta, particularly, I would like you to focus more on the regional perspective because Chan spoke about the local context, and Victor basically touched base on the global context. So, my expectation for you is to focus as much as possible on the regional context, so that we could understand, what has happened in the region, particularly related to so-called, fintech disruptions. So, Shanta, my first question to you is, Chan also highlighted this. Mostly, we are looking at the urban population here. So I thought the question to you would be very relevant to see, can the fintech serve underserved communities, to people who could not access financial services, for people who don't have a regular income or not a permanent job. One case in point that comes to my mind is M-Pesa, released in Kenya, which basically transform your smartphone to a bank account, allowed users to make and receive payments, make online deposits in a secured manner. And also, this case study claims that this has reduced the crime rate in a mostly a cash-based society. So, can you give some insights whether these things are possible within the region, whether these things have happened within the region? Over to you, Shanta.
Thank you, Shanaka, and good afternoon to everybody. Let me start by first thanking ENY and CFS Society of Sri Lanka for inviting me. When I was back in Sri Lanka almost 5 years ago, I was an active member of the CFS Society, so it's good to be back in one of the forums organized by the society, and also good to see quite a few familiar names on the list here. So on the question of underserved, let me answer that question from a practitioner's perspective, and from the vantage point I have, as you mentioned, operating and looking at markets in South Asia, Southeast Asia in particular, right? If I take my experience in fintech here over the last 5 years and look at kind of the various fintech players and very sizable players in this part of the world, almost every pitch book or every investment thesis revolves around some element of serving the underserved, right? Some element of financial inclusion in it. So especially in our markets, in this part of the world, in South Asia, Southeast Asia in particular, the primary thesis for fintechs to exist, a right to play, something that is fundamental to their business model, is the fact that there are underserved markets, underserved customers, and that is often proposition. I mean, I've gone and seen about probably 25, 30 pitch decks of fintech companies in my time here, and that's a recurrent theme, right? And that differs quite a lot. I mean, Victor gave a global perspective that differs quite a lot from some of the fintech models we see in the West, where a lot of it is really catering to serve markets, serve customers, where the model is more about disrupting services that are already there, right? And there's interesting dynamic when it comes to that as well. So, I mean, if we are to unpack this a little bit, right? If you look under the hood, is all this stuff real? Is there really a market failure here, and is there really an underserved segment? I mean, you took the case of M-Pesa, with Safaricom. That's a good example. It started almost, a decade ago, actually. Safaricom using what I call back then a first-generation wallet. And the fintech models, even and payment platforms have evolved considerably since then. But I guess the short answer on whether there is significant segments of underserved customers and small businesses in our markets is yes, there is. So even if you take a market like Malaysia, which is an upper middle income country, and you think nominally a lot of the customers are banked, if you look at the official statistics, again, depending on which stats you look at, you will have close to about 90% banking penetration rate in Malaysia. But if you really unpack that and see, there's a large segment, even in countries like Malaysia, where there is a significant portion of the population that is underserved, right? So where a large number of businesses and consumers don't have access to a full range of financial services, and therein lies the opportunity, right? If you look at markets like Indonesia or Bangladesh, those numbers increase considerably, right? And there is also a significant amount of customers and businesses that are unbanked. So I think the fact that there is a market opportunity, that there is a market failure, there is an addressable market is true. Have fintechs successfully built operating models that have taken use of that opportunity? I think I would say the jury is still out on that one. I mean, there are very successful models. I mean, the two obvious ones are the big boys out of China, Tencent and Financial. You have Bcash perhaps in Bangladesh. You have companies like Grab and Gojek in Indonesia and Malaysia, based out of Singapore. So there are successful models that have worked. But at the same time, I think it's still an evolution. Now, if you talk about the opportunity and the gap in the market, why is there underserved market? I think it's both a supply side problem and a demand side problem. On the supply side, traditional FIs have struggled to run models that are economically viable, serving underserved sectors. So, I mean, what does that mean? You think about it practically, servicing a $60 loan in Indonesia to a small retail outlet is something that a bank that operates a physical retail network and relies on income documentation for credit scoring cannot economically serve, right? But if you take a fintech that uses alternative data, let's say the transaction data of that retail outlet uses a psychographic data, various other data points to credit score that business using credit scoring and algorithmic models, and then disperses the loan on digital platforms, you can actually service even a $50 loan quite profitably. So one is the area around economics, and that's one reason why FIs were not able to serve the sector traditionally. The other big factor is, I think, information asymmetry on the supply side. So there's a large lack of information, especially if you look at the asset side of banking services. If you want to provide credit products, you have a large swath of thin file clients in these markets, right? So clients where there isn't readily available income documentation or traditional sources of data. And therein is the opportunity for fintechs who use things like, AI and algorithmic lending to make headway. So I think that's kind of on the supply side. On the demand side, a lot of these underserved sectors, you take a lot of businesses, a lot of consumers, there's generally an apprehension. There's a stigma associated with failure. There is a lack of knowledge in terms of how to approach financial institutions for banking services. And there's been a lot of surveys and a lot of studies done on this. And actually, some of it is quite mind-boggling why people don't want to engage with traditional FIs. So it's both a supply side and a demand side problem. And I think it's something that is there in these markets. If you take the fintech players that have approached this, I think broadly in these markets, you get 4 broad verticals that fintech players play in. You get the payment side of the business, and that ranges from, it could be somebody who has becomes an e-wallet player to somebody who actually provides payment services to link to a wider ecosystem like an e-commerce company. It could be both closed loop or open loop. We have alternative lending. Taking the example I just mentioned, alternative lending using alternative data is something that is catching on a lot of traction, especially in markets like Indonesia. A lot of investor money being poured into those sectors. You have remittance. We operate in a part of the world where there are a large number of receiver countries. So remittance is always a play. Some questions around the economics of doing remittance at scale digitally, but remittance is always something that is out there. And InsurTech is, I would say, the new kid on the block in this part of the world, where most markets, again, I mean, and I remember the stats in Sri Lanka also kind of showed that there is significant opportunity in terms of low insurance penetration rates and so forth. It's pretty similar across markets here, but the use of technology to solve that is also something that is gaining adoption fast. So across those broad 4 verticals, we've seen quite a few models working. The models that have gained scale, I would say, are probably the payment and the lending models. On the payment side, the thesis was really taking small businesses cashless, right? And a lot of this was influenced by the models used by Ant, and especially in Southeast Asia, the models used by Ant Financial and Tencent with WeChat Pay using so Ant Financial, where they wrote off the e-commerce platform Alibaba or Taobao and Tmall, and Tencent, where they wrote off their messaging app WeChat, right? They gained significant traction in the Chinese market, and that influence spread a lot to Southeast Asia. So a lot of large payment platforms again focused on small businesses, underserved businesses with the motive to take them cashless. It was the starting point for a lot of businesses. A lot of businesses that got into payments obviously collected a lot of data. You had companies also that were sponsored back by telcos. I think I broadly fit into that category, that also had access to a lot of data. So from that evolved lending models where alternative data was used to score customers who otherwise couldn't be scored, reach customers, score customers, provide lending to customers that couldn't otherwise be scored. So that was, if you like, the second level of service, and that those operating models have also gained some traction. And those are the two operating models that have gained a fair amount of success in these markets. So in some more so in certain markets than others. It's also a factor of regulation. It's a factor of how far the regulators want to permit some of these models to play out in their markets. So each market has slightly different regulatory philosophies when it comes to fintech. COVID has changed things a little bit. Well, not a little bit. I think that's an understatement. I think COVID has helped fintechs, especially those focused on underserved small businesses, primarily in two areas. One is that a lot of policymakers, a lot of governments have focused on taking small businesses digital, accelerating their path to going online, to getting onto e-commerce platforms. And with that, creates an opportunity for fintech service providers, because fintech service providers are often embedded in some of these e-commerce platforms and other services. So in both Malaysia and Indonesia, we've been part of very large government efforts to drive small businesses, take them into the digital world, get them online, provide them the relevant tools and services, provide them instant financing. And I think that bodes well for the industry in this part of the world. The other thing I think that I would say about making models successful in serving underserved customers is the fact that there's a little bit of an irony, because your target segment is that you're trying to approach digitally is probably also a segment that is not very digitally literate, right? So there are various models that a lot of, not just fintechs, a lot of technology companies have used to try and bridge that divide, including assisted models where there is an element of offline, online to help, especially with things like onboarding. What we find is generally that fintech companies that are embedded and are part of a wider ecosystem are the ones that are most successful. I can take an example to tell you what I mean. So supply chain financing for small businesses, for instance, is something that is gaining a lot of traction in this part of the world. And if you take a small business, and a small business that maybe orders from its supplier once a week, when a small business actually orders on its order management system, let's say there's a simple order management system, there are very often options where you can purchase for cash or purchase for credit. Now, the credit option is offered typically by a fintech company, and this is a real life example of something we do. And the customer or the retailer is able to instantly get the facility that he or she wants, because usually the customer is pre-scored using alternative data. The customer does not need to change their behavior to interact or adopt the service, which is fundamental when dealing with this sector of society, right? Sectors that are generally not very digitally literate, where it's very, very difficult to change somebody's behavior to adopt your service. And then in terms of the customer journey, it's seamless, right? So companies that have embedded themselves into the lives, into the purchasing cycles, into the transaction journeys, order management systems of businesses and consumers, I think those are the models that have been most successful. And those are the models that I've seen kind of gain the most traction in the marketplace. And there are various examples of that. Kakao Bank in Korea is one such example, one of the few digital banks that became profitable in a very short space of time using a model similar to this. Right. I guess to sum up, Shanak, I would say that definitely there is an opportunity, and definitely the right to play and the right to exist for a lot of fintechs in this part of the world is the fact that there are underserved markets. I think you need to be very nuanced in how you actually provide some of those services and go to market with what you want to deliver, because not all models have proven to be successful, right? And like I said, the ecosystem-based model is kind of the one that I've seen that has been most successful in this part of the world. So over to you, Shanaka.
Thank you, Shanta. I have one more question based on what you just said. Well, I think most of us knows about the success story of Ant Financials, offshoot of Alibaba, named as one of the, the largest fintech in the world, amounting or valued at 60 billion US dollars as of today. And you were talking about the various different models they adapt. So one question, I'm sure you're slightly away from Sri Lanka at the moment. You said, 5 years you left, and you probably will not have a quite an updated picture at the moment. But with your knowledge, do you think the same models, what was practiced by these giants, could be adapted by our startups to medium-sized fintechs in the country, or is there a different thinking that they should get into when they're trying to launch certain services in Sri Lanka?
I mean, it's interesting. You take the model you took, Ant Financial, right? Ant Financial fundamentally was a model that really gained traction using what I described, right? They had a captive ecosystem with Taobao, so Alibaba, which was the e-commerce platform, primarily two sites, Taobao and Tmall, right? And it started off by being just an escrow service for payment. It solved the problem of being able to make online payments for customers who wouldn't otherwise make online payments because the credit card penetration was very low, especially with the segment that Alibaba was catering to at the time. So it started off by just being an escrow service that had a stored value. And so it had its origins in leveraging off an anchor use case, right? An anchor use case that grew exponentially, which in this case was e-commerce. And that was the beginnings of Ant Financial. Now, when Ant Financial developed, which was really the Alipay platform, when they developed that huge, if you like, customer base of its e-commerce base, really, they were able to then cross-sell and provide other services because they had stored values of customers. They suddenly realized they can do payment services outside e-commerce. So they started doing QR code-based e-commerce, so much so that QR code payments became the standard in China, especially for that sector, right? So they were able to layer up on the initial anchor use case that they had, and then they went into using the transaction data they had. They invested in a whole host of data scientists, right, and developed advanced AI models to then be able to lend to these customers and so forth. So I guess what they did successfully is they were able to leverage off anchor use case that was already embedded in an ecosystem that was growing. And that's a model, I mean, that's an illustration of the model that I just described, right? And obviously they did it in a much larger, I mean, if they had gone public, they would have been worth $300 billion, $30 billion IPO, I think that was, that was called off. But I think that is definitely, I think, the model for success. And we've seen that same concept being taken by other companies. So, I mean, if you take a Sri Lankan example, I mean, PicMe is a ride-hailing company. There are ride-hailing companies in Southeast Asia that have taken the same concept of having a very large base of customers who are ride-hailing to then leverage and move into financial services, and some have done it more successfully than others. So it doesn't, so that kind of a model where you have an anchor use case and an anchor base of customers, and then leverage on that to provide financial services, starting with payments, because payments is often the enabler, as I think Channa said, right? It's often the enabler, creates the foundation for you then to build other services. And the most successful fintechs have done that. So the short answer is yes. I mean, if you have that, if you have businesses in Sri Lanka that have that captive base of customers, and especially digitally engaged customers, that is often an interesting place to start for fintech. And where a lot of fintechs actually fail is, in the first mile, right? They fail, they're unable to, the customer acquisition cost. Building that ecosystem for themselves is usually very prohibitive in terms of cost, and it just doesn't work. I mean, you take the case of digital banks in the West, or none of them are profitable. All of them are spending hordes of money on customer acquisition because they started from ground up. So to answer your question, Shanaka, definitely, I think there is opportunity. Again, you need to start with the base of customers that is digitally engaged. It can be, I mean, it doesn't have to be anything to do with fintech, honestly. Right? It doesn't have to be anything to do with fintech, but you need to be able to find a way to use the fintech tools and services you have to enable that business. And that's an interesting model that works quite well.
Thanks. Thanks, Shanta. That was very insightful. Well, next, we would like to invite Mr. Dharmasri Kumaratunga, director payments and settlements in Central Bank of Sri Lanka. Well, all eyes on you, Mr. Kumartunga. The previous panelists were very positive and passionate about fintechs, and then all ends at you being the regulator. And I'm sure you've probably gone through this stress many times. So, Mr. Kumartunga, my first question to you is, if I recall, I have seen many initiatives by central bank to support fintech, such as Open API, Sandbox initiative for fintechs. Then I heard the recent eKYC initiative, regulatory framework. Well, anything that you would like to share with us, with the audience, about the future plans of the regulator, particularly to support fintechs in the country? Over to you, Mr. Kumartunga.
Thank you very much, Shanaka. And so let me start thanking CFA, Society of Sri Lanka. And can you hear me?
Yes, loud and clear.
Okay, so Sri Lanka to share my knowledge and the experience which you are having at present. So with the COVID situation in Sri Lanka, I think Channa and the other speakers also say that with the COVID situation, there are many other digital opportunities at present, and we were having some experience with driving this digital technology. With the other countries are also having the same problem, and also new technology and also new innovations are there. Then with that, there are many services, and the use of the technology is also higher than compared to the normal years. We know that the safe transaction and the common cash transaction and other just pay transaction, and including the QR transaction, is also significantly increased compared to the early stage. CBCL actually has taken many initiatives during last few years and continuously working on to support the digital transformation of Sri Lanka in finance sector. CBCL encouraging innovation and expanding the horizon of the financial inclusion of a country. The one initiative which we have done is that FinTech regulatory sandbox, which we launched in February 2020. The major framework, and this allow for this small scale and the live testing of the innovating FinTech products under the finance sector regulators supervision. And so we have identified the requirement of the FinTech industry when this sandbox, I think, implemented in the other countries. The regulatory sandbox itself provides the safe space in the controlled live environment for selected innovation to test their products and services without the risk of infringing of the regulatory requirement. So this is a major achievement for the FinTech industry in Sri Lanka, because we were waiting and have the discussion long time back for implementing and the establishment of this regulatory sandbox. For the innovators, this process provides the innovators with the opportunity to better equip themselves to seek the regulatory approval from getting from the central bank. And the major intention of this introducing of this regulatory sandbox is that to create a robust and sustainable innovations that can be provide more efficient financial intermediation and greater financial inclusion. And our major task is that last few years and the next few years is that going for the less cash society through digitalization of Sri Lanka. And so this is the major initiative which we have taken for FinTech industry, for support the FinTech industry. If the FinTech industry or the FinTech want to apply for the sandbox, they have to come through the application has to come to the financial institution, because we are the people that the central bank is the, I think, institution, regulate this financial institution. Then it is easy for us to monitor and regulate this financial institution. So therefore, we invite all the FinTech companies to, I think, get their application or the model which they are proposed if it is a new innovative product, then of course we will be able to accept that one. So in addition to that, so we also introduce a few channels for fintech industry in Sri Lanka. So one is that AI-based solution and also blockchain-based solution, biometric and IoT, mobile money and open banking. So these are the areas now we are working on that one, especially the blockchain-based shared KYC project and open banking digital payment platform. In addition to that, we also looking for the digital payment platform that is a seamless payment mechanism. We are going seeking to any players to the other player or any vendors to the other financial institution. So this is what we are expecting digital payment platform and digital banking with our region areas. We know that many countries are using now digital banking, and so they are giving some license. So we also want to look on that one, and next few years we are working on that one. If we go through this AI, so we have appointed a committee to look on these what are the possibilities and the recommendation can give for the AI, use the AI technology for the financial institution in Sri Lanka. Then committee has submitted their report according to the payment services roadmap, or the payment roadmap we have introduced in 2020-2022 is also included this one. And so therefore AI, the appointed committee, has given the recommendation for the how the impact and also the possibilities for having use of this AI technology. The first one is that credit decisions and fraud prevention, risk management, and churn predictions, and personalized banking, trading, process automation, and custom verification. Those are the major areas they have identified. And now internally, after we receive this report from the committee, then I think committee experts are from the central bank officials and also from the financial institution, including the Lanka Clear officials also working on that one. And I think good recommendations are given for this committee. And I think next step is that we have to work each and every angle and introduce our financial products or the financial institution AI technology. So that is what our target. In addition to that, the blockchain technology using the shared KYC. For the shared use for the shared KYC. The first time we know that what we have seen last few years that the banks and the other financial institutions are talking about the blockchain, but no one is going to implement. So therefore, Central Bank of Sri Lanka has started use this blockchain technology for the shared KYC process. Then so this will benefit for the other banks and also for the especially for the customers to share, and I think onboarding customers is also I think easy, and banks also it is easy for them to I think keep the record and update the record of the customers. So with that, we have published the paper notice early stage 2019, and we received almost 40 companies as applied for running this POC. So this is without any payment. As this is we identified as a national project for the POC context, they have applied for the 40 companies, local and foreign companies, and we have selected 3 companies out of 40, and already they have completed all the POC, and 30th June it has completed, and now we are in the process of submitting the report and observation given by this testing process. And 12 banks, foreign and the local commercial banks participated for this POC testing. It was very successful. And the next step is that involving all some of the fintech companies, and this is the opportunity for them to, I think, come and onboard in and develop on some kind of software. And after we get in the required approval on the CBSL, then we'll be able to implement this shared KYC. There's a huge benefit for the customer. Open banking is also, we have appointed the committee for look after this open banking. So I think this is a very useful for the, I know that most of the other countries are working and some countries are already implemented these things, and we appointed the committee last year, and the committee report also submitted to the National Payment Council, so which is the highest decision-making body of the payment system in Sri Lanka. And what's the open banking and without open banking, it's the left-hand side. You can see that customer is directly involved with merchants and the banks. But after we having this open banking, there are many opportunities are coming for these under TPP. Then this is TPP is I think that is represent all the fintech companies can support and involve this developing this third party product or the third party involvement is there. Then customer is always linking the other bank and the financial institution and also the merchant through this TPP environment. And that's a given. The TPP is given many opportunities for the fintech companies to come on board and proposals on that one. Mainly the third-party service providers is providing, and so they are the people that the data holders on behalf of the consent of the customer. Always that customer consent need to be there. So with that, I think mainly the committee also identified two major areas for the TPP and account information service providers, that is we call the AISP, through the data sharing, and also payment initiation service provider, PISP. So those are the major two areas they have identified from the report. And now the second step is that implementation step will take some time, as this is a new thing for the Sri Lanka, and we are working with this one. And also it is required for implementing this open banking for Sri Lanka. Is a Data Protection Act. It is a requirement going for this open banking. In addition to that, the several other initiatives also, I think, implemented and initiated by CBSL. The first thing is the Lanka QR. Chan also, I think, touch on that one, Lanka QR. So it has initiated, and I think with the collaboration of all the financial institution and also with the Lanka Clear, we, I think, launched in 2018 October, and now 21 apps are there. Use this Just Pay and also the Lanka QR payment instrument. And I think mostly when we compare to the post transaction and the post machine especially, we know that last 30 years period, the post machines almost 85,000 to 90,000, plus last 30 years it has distributed mainly in the Gampai and the Colombo area. More than 45% is located in Gampai and the Colombo area. It has not distributed all over the country. So that is what we introduced the Lanka QR. And now within 4 months period up to May, now it has the merchant has increased more than 240,000 plus. So there's a good scenario. And in addition to that, we also involved with the development of the national transit card with the Lanka Clear. We got the monetary board approval and informed to the Lanka Clear, and they are working on that one. And I think next few months time, so it will be in the market with the Transport Ministry, Lanka Clear, Central Bank, and also other entities, SLTB also are working on that one. And in addition to that, we also identified the new RTG system for Sri Lanka. Because now the present RTG system is 17 years old. Therefore, we have identified the requirement of having a new RTG system. The smooth transaction and also the more open for the customers and the other players is also we are considering. So some other countries, India, Singapore, it is open till 7 o'clock in the evening. Then we also looking on that one. And then during weekends, also some cases where we want to open the real-time settlement system. So there's a large value payment system in Sri Lanka. In addition to that, we are also working with the multi-currency RTG system. That is new items for the Sri Lanka. So most of our region, multi-currency RTG system is not using. In Malaysia, it is using, but not for the purpose is different, and it is not called the multi-currency RTG system. But so therefore, this is the first time in the region if we have implemented this multi-currency RTG system in our region. In India, also not using, and other countries we check, they are not using. At present, that initial stage is that open up for the dollar term only, but other country, other current currencies we can think on later after we implement in this dollar transaction through the RTG system. So it is easy if you are having this multi-currency RTG system, it is easy for us to do this cross-border transaction. So in addition to that, data sharing between the DRP and the banks for KYC verification. So there's a major, I think, barrier we have identified in the during the COVID situation the last year. most of the commercial banks and financial institutions, they have requested from the CBSL to, I think, give the facility for onboarding, online onboarding of the customers. So with the current, at that time, so we have allowed for all the commercial bank to make that one. And now, I think Department of Registrar of Person has given or shared their databases with the financial institution to verify the KYC verification. Now, of course, that so with this facility, online onboarding facility is there, but we are waiting for digital NIC. Once the digital NIC comes, then of course it is easy for all the financial institutions to onboarding the customers. And in addition to that, virtual currency schemes, we also, I think, appoint the committee, and so committee is given the report, and another committee is appointed to look after the regulation, which kind of regulation we can make it. And we have appointed, I think recently we have the new committee that is a low-cost remittance channels coming to the Sri Lanka, studying the how these low-cost remittance channels use for all the financial institution. That's a common platform we want to use, and this is all at present most of the commercial bank we selected for the members of this committee, and CBSL officials also in this committee, and they are looking for introducing maybe in the blockchain or any other technology used for these remittance channels. And also I want to tell that the PayPal facility, we are working on that in the last few years. In my time also, last 4-5 years time, we are directly write to them and have the discussion with them. So however we want to get this facility to Sri Lanka, that is our target. Thank you very much.
Thank you very much, Mr. Kumartunga. One question from the examples you gave me. So shared KYC, there's a lot of questions directly targeting at you. Maybe in the interest of time, maybe I'll throw one or two, Mr. Kumartunga. But related to the question also, so this shared KYC initiative that you have taken maybe looks like the first step of a eKYC, no?
This is quite different from the eKYC. eKYC means that if you want to, there are two aspects. The one aspect is that if I want to open my account online, then of course you have to use this DRP database and open that one. Or else if you have the digital NIC, that can be done. And the shared KYC purpose of that one, when you open the account in one bank A, then you have to fill, I think, large number of pages and forms. Then again, if you want to open another account in the bank B, or you want to open an FD in the bank C, then again you have to, I think, fill all these forms. So without filling all these forms, I think after we introducing the shared KYC, only one form you have to, I think, fill. So at present, if you are feeling that already done that one, then of course the other banks can share that one using the blockchain environment. So there's a major purpose of the introducing shared KYC.
So if the customer is already onboarded in bank A, for bank B, we could onboard the customer, a new customer, using that existing KYC in bank A, I believe.
Correct. Yeah, exactly correct. Yeah.
Yes.
So that is
the question is also related to that. Why don't CBSL allow fintechs to digitally onboard customers without visiting to the bank? So I believe the shared KYC is step one, where if the customer has a KYC already in bank A, of course, bank B could onboard the customer without another KYC using that shared KYC. And also you highlighted the eKYC will probably begin with the digital NIC.
Yes, yeah.
Right, so, right. I have one more question to you, Mr. Kumartunga.
Right.
In the West and in some part of Asia, as spoken by our other panel members, we see that the regulatory frameworks are quite conducive to business. I mean, regulator backs and support these industries, particularly when I read through the Ant financials, of course, the regulator backing and financials. But the financial services industry, but the financial services industry in this country is telling that the regulator in Sri Lanka is of course rigid and then have become a bottleneck for the growth. Is this correct? And how do you balance these constraints within the context of Sri Lanka?
All right. Thank you. Thank you for asking that question. So there are major, I think, problems which you are facing. One thing is that first we have to think on the financial stability of the country. As a central bank, so we always thinking of that financial stability. That is a major concern of the CBSL and any I think central bank, that is one concern, and customer protection. So that's another angle. Because there are many, I think the fintech products or any other products having in the market, then the customers are going to use that one. Then of course that there should be some mechanism to not to control, but to bring it to the regulatory, the framework. So that is what our major target. Then so if the application, the payment application is using to fraud money or scam something, then of course there should be some, that the security strength should be there. So that is what the CBSL has issued the minimum compliance guideline in 2018 and 2020. I think that has covered many areas of this the fintech development and also the apps, payment apps. So if you go through this, the guideline which you have issued, I think each and every angle it has covered. And this is not going to block or the other block, especially the block this, we are not going to aim for the block of this any payment apps or the development of the fintech. So we are looking on the regulatory framework and the regulatory angle. If you go through this, I think the neighboring countries, especially if I call the RBI in India, Central Bank of or Reserve Bank of India, then they are having some more regulatory framework. Like for example, they also regulate Visa Master, like international card schemes also regulated. If they want to have the new card scheme, then they have to get the license or the register from the RBI. So that kind of regulation is not implemented by the in Sri Lanka, but some kind of regulations should be there to bring the framework or the payment system has to be stable in the country. So therefore, that is a major concern we are looking. And one more, I think, slide I can't forget, and I want to highlight is that the right-hand side. So when you receive the business proposal from the financial institution or the fintech company, we are looking, there are many problems we are facing. The first one is that technical information. So it has the proposal, I think already they have developed the system, but most of this, the proposal has not indicated the required of the technical information. So there's I think major barriers or the, I think awareness has to be done by these fintech companies and the financial institution, and product scalability, and also it has not identified that how these payment apps or the fintech products is introduced to the market, how to introduce and what is the purpose of this one, and what are the consumer security is having these payment apps. And most cases we have not seen this dispute resolution, and we return this thing. And I think the final stage is that in most of the cases our CBSL staff is writing kind of proposal, because all these proposals are coming. I think finally the proposal is going like from the CBSL side. So those are the things we have to, I think, inform to the financial market, and data privacy is also we are looking on that one. And therefore, that business value also indicated the purpose of that business proposal has to be indicated properly. So those are the major areas we are looking. And in some cases, I think, and I think some players are saying it will take long time for getting the approval. Yes, it is there, because that we are looking each and every angle. After we say that the CBSL is saying, or as a regulator saying, this is an approved kind of business proposal or the payment app, then all the, I think, authority and responsibility is coming to the central bank. So therefore, we are looking each and every angle, and also that financial institutions also looked on the left-hand side, which I have given, I think, left-hand side. And so because in some cases, when we are introducing some of the apps, and I think 82% of our population is rural. Then digital literacy is quite low, and so we want to give some experience for how to use these apps and other things and products, new products. So that's I think a big challenge for the CBSL. And Victor is also saying that his presentation that consumer protection is also important, and so a lack of transparency is also yes highlighted, and data protection, privacy, and fraud is also happening. These are the things we are looking as a regulator. And finally, Victor also, I think he said that awareness of a digital transaction, because there are many products in the market at present, but if you are not aware of this digital product, the digital instruments, then of course it's a waste of our money, and investment is not getting the, I think, maximum profit. So therefore, the Central Bank of Sri Lanka announced this last year, 2020, as a digital transaction year. The major purpose of this one is that give the awareness for the I think existing digital products for all the players or the customers. Thank you.
Thank you very much, Mr. Kumartunga, and thank you very much for the insights and giving us that vision set by CBSL for future growth of fintechs. There are a lot of questions related to this. I think I covered some of those questions by asking those particular related areas from you, Mr. Kumartunga. So I would go to Channa now. Channa, I'm relating questions also that has come through the Q&A panel. One question is on a local context. Of course, Channa, we hear concepts such as direct debit, tap and go one card concept, then pen concept, which would add to innovative payments landscape in the country. One question is also, can this kind of cards be used across the landscape, even at government entities to make certain payments? So we want to check with you, what are your plans on such technologies going beyond today? Is there anything that you could share with the audience, how they should prepare, how particularly the fintechs should try to align with your vision?
Yes, thank you, Chanaka. Yes, I think one of the fundamental things that we are trying to align is also part of security, be part of the whole ecosystem, right? So we actually operate the only certificate service provider, digital certificate service provider, we call it Lanka Sign, right? Where I'm not very sure whether the audience is aware that most of these mobile payment apps, when they are linking a bank account, they're already actually getting a digital certificate issued to the device, and they're actually signing a digital mandate with the bank, acquiring bank of the app, giving them authorization to do sort of a low value direct debit. So that's already in place. So there's hundreds of thousands of digital certificates are being issued to devices, and their customers are already signing digital mandates, giving them authorization to debit the account based on the customer's consent. So that is going to be a pillar, the large pillar in this whole ecosystem. So I think we looked at multiple areas in terms of solutions. So I think Mr. Kumartunga also covered Lanka QR. One of the problems that we had was getting merchants on board. So 3 decades of cards, only 83,000 terminals, but every supermarket has 4 or 5 terminals. So less than 50,000 merchants on board. Here, within a year of Lanka QR, we have more than almost 250,000 merchants on board. So there is a, one of the areas there we addressed was the commission that was charged by some of the international card schemes, which ran into almost 3 to 3.5%. Where a small retailer, the profit from a good or the service may be at 5%. So they were reluctant to accept cards. Whereas with the central bank intervention, for the moment it's 0.5% MDR or the commission. During the COVID period, they brought it down. Actually, it can only go up to a maximum of 1%. So I think this ecosystem is growing at a rapid pace. And what we call Just Pay, it's actually for fintechs. That was an ideal solution where they can sign up, partner with one bank and sign up any customer of any bank to use their bank account to make a payment. And sign a digital mandate giving that consent, and based on their request, the payment can be made and the money is pulled from their account based on customer consent. So which is a major revolution. So we saw almost almost 2.7 billion worth of transactions happening last month. Small retail value like 2,500 rupee average size. And the government payment, we have implemented a system where initially the customs was connected. Customs was open 24/7, 365. Banks were open only until 3 p.m. not on weekends. So integrated this system where a customer can log into internet banking, mobile banking, or FinTech app, and pull the actual customs custody documents, amounts to pay. They can actually make a payment real time. So and then the customs issues a certificate to that app, and then you just can either take your phone or take a printout and go and clear the goods any day during any time of the day, even weekends. So in addition to Customs, Inland Revenue, Sri Lanka Ports Authority, BOI, EPF and ETF are on the way of joining. Local authorities like municipal councils, they will be coming on board. So from in the future, any FinTech app can integrate with this. Carry out the payments, which is a facilitator or enabler. And peer-to-peer payments obviously is something that Zelle and other popular apps in the world. How do you facilitate? I want to make a payment to my plumber, who's or my newspaper guy, or the guy who does the mason, right? The construction. These are daily workers, and peer-to-peer. These are not merchants. These are individuals. So we introduced the concept of payment exchange name, which is basically linking your mobile number to your account through a nickname. And all you need to know is the receiver's mobile number and the nickname for the bank account, and the backend, the funds get transferred from my account to the receiver's account. And in terms of the two-in-one or the transit sector, what we saw was in other countries, the usage of cards and other things in the transport sector has been the first of a lot of people, and then they moved into other areas. So that is where we are introducing what we call two-in-one technology, where a single card will have a stored value and a debit and a credit functionality built in. And we are also implementing a sort of a virtual card, a wallet, if you will, which can plug into an app and also do a tap and go in a bus. So Sri Lanka Transport Board has 5,000 buses already enabled with point of sales terminal, which can do tap and go, and private buses and the railway are implementing. So I think this is, and this same technology can be applied for toll booths, to car parks, so many other areas to make these payments tap and go. And another area that we are coming, we want to give traction to all the FinTech apps that they are, you get so many requests for making payments, like your utility bills to mobile bills, so many other things, but we don't have a bill presentment type of a platform where you get a request and using that request to make a payment. So we are coming up with a bill presentment platform. The messages that you get, whether it's SMS, WhatsApp, or Viber, will be a smart message, and you just click on the message and it'll open up whatever the app you have, whether it's whatever the payment app or a FinTech app you have, and you can just select that credentials to make a payment in real time. So this whole ecosystem has now come together. I think it's opportune time for FinTechs to come on board and provide services, and with the enabling infrastructure is already built in. So I think it's a good time. The timely and also COVID is going to help, because a lot of people are more prone to adopt digital technology than not. So I think it's the right time, and I think this webinar is also right. And I invite all the FinTechs to come up with crazy ideas. It doesn't really matter, that works in this context. Now you asked the question of M-Pesa in Africa. M-Pesa in Africa work because there are hardly any banks in Africa. So if you want to go and withdraw cash, you have to go 500 miles, right? And the only option they had was a mobile. It's a smart or a feature phone, and that worked. But in Sri Lanka, you go out of the street, you get 10 ATMs all over the place, right? And so the context is different. So when we look at technology, bringing that into a place, you need to look at also the context. We are a well-banked country, so you can use the bank accounts to make payments. So that is where I think you can't just bring some technology from somebody outside and plug in and think it works. It doesn't really work, because obviously the context matters. So I think these are good lessons for FinTechs who are looking at solutions, address problems in the country, people's problems, then people will start adopting. And don't be just a me too. I think Chanaka brought the question, we have now about 10 ride sharing. Just because Uber and Pick Me came and succeeded doesn't mean that the third guy or the 10th guy is going to succeed. Again, I said the payment apps, there are about 20 plus payment apps. Go and look at other opportunities. There's a massive green field out there, and partner with financial sector, and we can work, bring the whole ecosystem together in collaboration. Thank you, Shanka.
Chana, thank you for that. You're spot on that. Actually, thank you very much. I have one question for you, one last question in the interest of time. I want a very short answer, Chana, because cybersecurity probably might be a big concern to you because you're in the center of all this. So, and as the nature of FinTech, well, FinTech basically can hold huge amounts of sensitive data, customer data, transactional data. And I believe it's a very high risk if this data is stolen. So anything to note, anything that you could advise on security, what kind of mechanisms that you follow so that the rest of the FinTechs will learn something? Yeah, so obviously we use digital signatures to in terms of signing transactions to encrypt data, so which is a basic step. And central bank, Sukumaran touched on it, introduced a baseline security standard for banks, as well as baseline security standard for mobile payment application, which includes two-factor authentication kind of thing. And from a payments backend, we were the first to obtain a payment card industry data security standard, which is the highest in the payment card industry, which basically masks all the data, from fraudsters. Even our people will not have access to that based on this framework. And also, in terms of, we have also introduced what we call the financial sector cert, which basically looks at the entire financial sector, looking at possible loopholes, cybersecurity lapses, from patch updates to so many other areas that can go wrong. So they basically advise the banks and work with them to ensure that this whole ecosystem is secure. So I think the advice to the FinTechs is, on one side, the regulatory framework is a must because that's the last recourse for a consumer. So don't think that it's an inhibitor. It's actually a facilitator and enabler. And I know central bank has been very progressive and in supporting this. The second one is, don't take security as not as so important, but there are so many fraudsters in the market to come up with million security precautions, but there's these guys will find a way to work around you. So don't think that some of the restrictions and regulations that come in place is an inhibitor. Those are there to safeguard the consumers and also safeguard the banks and safeguard the FinTechs as well. In terms of, because what happens is, if everything goes right, people are happy. But the day something goes wrong, where do you turn to? Where do a consumer turn to? Where do a FinTech turn to? Where do the bank turn to? So that the regulator actually has a key role. So I think that is where we need to collaboratively work. I mean, not to be restrictive from a regulation perspective, but being an enabler, but ensuring that all these areas like the data privacy, the protection, the security, and all this, because we are dealing with people's money. I mean, it's not just some information, right? So we need to be very careful in how we deal with data and how we handle data and how we share data. So all these must come in place, and certainly the regulatory role plays a key role in this. Thank you. Thank you very much, Channa. Shanta, one last question for you also. I need a quick answer in the interest of time. So recently, I saw the many digital banking licenses were issued by countries such as Hong Kong, Malaysia, Singapore. Want to check with you in a regional perspective, is this a model where FinTechs and regulators work together? Has this become success in the region?
Okay, I mean, so the short answer to your first question is yes. I think it's a model that I would say, again, it depends on the market. Again, you mentioned 3 markets. The objectives of all 3 markets were slightly different. Hong Kong was more about elevating its status as a FinTech hub. A lot of the banks and the banking framework it came out with was no different than a traditional bank. It just allowed you to do everything digitally. Singapore and Malaysia took a slightly different approach. Singapore took if you like, a graduated approach where initially you came in with a lower threshold and you were allowed to expand your business model. Malaysia actually took an approach where they wanted applicants to have a basis for or have models that can serve underserved segments, right? Being a country with a slightly larger population than the other two. So there were nuances and there were differences, but broadly speaking, I think the objective was to bring fintechs and technology companies into the regulatory fold. That was one of the main objectives behind it. And I'd like to echo a few things that, Chandna said. I think successful fintechs that I've seen are actually fintechs that have worked with regulators and progressed, right? The eKYC framework here in Malaysia is now out, and some of the banks have launched it for CASA here. That was a process where I think the banking industry and some fintechs went through almost a 2-3 year sandbox process and graduated out of that process with the regulators. And I think that's important because I've been in digital for a long time, and unlike other industries, other digital industries that where digital innovators disrupt traditional incumbents, in the financial services industry and the financial industry can lead to systemic risk. Right, as Mr. Kumaratunga said. So if you don't, it's our folly to ignore that, right? So if you want to really grow sizable fintech businesses, we have to engage with the regulators progressively. I would urge fintech companies to actually share data that you have. So one of the things that we've done in our fintech businesses, and full disclosure, we are also one of the applicants for the digital bank license in Malaysia, is disclose a lot of the experiences we've had in the underserved sector using data and AI to serve customers, and some of those have gone into the policy inputs of regulators here in Malaysia. So I think engagement is important, and I think the fact that a standalone digital bank, you may argue, some people may argue, why do you need a standalone digital bank license? Because you can technically do that under a normal banking license. I think it was done in a way, especially if I take Malaysia and Singapore, like I said, almost in a tiered approach, where initially you get, if you like, a more contained license to operate within asset caps and deposit caps, and then graduate. So it was really done to bring technology companies in, as opposed to allow banking services from day one. And I think that was quite progressive. There was a lot of study done on this, and I'm happy that Mr. Kumaratunga mentioned that we are looking at it in Sri Lanka as well. The second question on whether it's been successful, it's too early to tell. I think the 8 banking licenses were given in Hong Kong. They have just, they launched at the height of COVID. You may argue that that's a good time to launch a digital service. The results have been mixed. In Singapore, 4 licenses were awarded, and I think none of them have started operations yet. In Malaysia, the applications just closed a couple of weeks ago, actually. So it's probably very, very early days. But I think it was an approach. I think there are other countries in the region, Philippines, Indonesia, who are also thinking about coming up with their own digital banking framework. So it's something that I think will gain in popularity, and it's definitely a mechanism for fintechs to graduate up the value chain. And I'm glad that Sri Lanka is also looking at it.
Shanta, thanks. One small thing for you. I see you are very passionate on this, fintech. So one question, a direct answer. Should fintech be regulated?
Yes. Fintech should be regulated, and it's important for fintechs to engage the regulator. I think that's the most important thing. A lot of fintechs try to stay in the fringes outside regulation. And you guys can read what happened to Ant Financial and Tencent, right? So nobody's safe. I think engaging the regulator early is quite important, and growing in a regulatory environment is the only pathway forward.
Sure. Thanks, Shanta. So I want to wrap up the session. I want to wrap up the panel discussion with last question to Victor. Victor, to close the session, globally, is there an impact to fintech industry because of the pandemic? Have you seen any impact globally? Victor, we can't hear you. Victor, we can't hear you.
Muted.
I don't know whether, Aruna, can you hear Victor?
Yes, we cannot hear. I think Victor, you're muted, I think.
Yeah, Victor, we can't hear you, Victor. Still no, we can't hear you. Maybe you can try without the headset. Still no. You're on mute or no? No, I think, Victor, sorry, we can't hear you. So due to the time limitation, sorry, we have gone. Thanks, Victor, for that attempt. I think there's a technical problem. You are not audible. So due to the time limitation, sorry, we have taken about 10 minutes additional. So there were a lot of questions. I basically ran through most of them, and I tried my best to put those in, but could not cover all due to our constraint in time. So I would like to thank all speakers today, the panel members. So Mr. Victor Anthony Pille, thank you very much. Mr. Channa De Silva, Mr. Dharmasri Kumar Tunga, and Mr. Shanta Abekon, thank you very much for all your time and effort in joining us for the session today. We are honored and privileged to have you at the forum, and I'm sure a lot of insights from global to region, and particularly towards the local context by Channa, as well as a lot of insights from Mr. Kumar Tunga on how the regulator is showing signs of flexibility on supporting the fintech industry. And thank you all of you for those very insightful sessions. And also I must thank all the supporting individuals and organizations who basically helped us to launch this session. And a big thank you goes to all of you participants who joined today. And we look forward to engage with you again in the future. Thank you very much. All the very best.
Thank you.